Hi, I'm Kevin Wan, the Contractor CFO and COO, and in today's video, we're going to go over the 5 tax deductions every contractor must know in 2025. First, why should you listen to me? Well, I've been an enrolled agent since 2021, and I've been helping clients with tax planning even a little bit before that. So I've been saving clients hundreds of thousands of dollars in taxes for over 5 years. And I promise you that you can save thousands in taxes as well from some of these strategies or deductions I'm about to go over. So I'm going to show you them step by step, the deductions you can use in your business. Let's get started. 5 tax deductions. So number one is retirement plans. I know this one seems kind of obvious to have some sort of 401k or SEP IRA set up or something, but you'd be surprised how many businesses start growing and scaling, and before they know it, they're at 2.5 million and still have not gotten around to doing this. Part of that's a cash flow issue of feeling tight on cash all the time. So if you're running into that, let me know. You can click on the link in the description below, and we can talk about that and help you out for free for 30 days. Yeah, 401k in SEP or a SEP IRA is huge. There's different pros and cons for each one. I believe I have already have a video out about those and the differences. But yeah, you must be profitable and cash flowing in order to take advantage of this because it requires that you take a chunk of cash and set it aside in another account that you're not going to touch for a long time. But it does give a huge benefit to your business to be able to do that. Yeah, like I said, huge deductions. If you're in the 24% bracket or the 32 or 35, or I've even seen it in the 37% bracket, that means for every $1,000, we'll just make it higher. For every $10,000 you put away, if you're in the 37% bracket, that saves you $3,700 off your tax bill. All right, so pretty powerful. Deduction number two to consider is your entity selection. Are you set up correctly? Did you just go out and form an LLC and then never worked with your accountant or a CPA up front to figure out, hey, here's my end game or here's my goal with this? What's the best way to be taxed? Or did you just set up an LLC and start collecting checks and you're off and running with your business and before you know it, you've made 500,000 in sales and you're still not set up correctly? I've seen this over and over and over again. You'd be surprised. So, if you're looking to grow and scale your business and then exit, I've seen this a lot, at least on Twitter. I see a lot of people talking about buying a HVAC business or a plumbing business or something like that, more home services based, where they feel like they can scale it and then exit, within 5 to 10 years or something like that. Um, you might need to plan for capital gains tax. That might lend you to a different tax structure than if you're just starting your own business with your own sweat, blood, and tears, and you're going to grow it into something you can be proud of, and you're going to work in it every day, and you have no plans of ever selling. You're just thinking, well, I'm just going to do this the next 20, 30 years. That's how I'm going to make money. So longer term, maybe you need to go S corporation. Maybe that makes more sense for you. But either way, avoid Schedule C if you're expecting strong, consistent income. All right, and that's kind of the default of where you end up if you don't do proper planning. And this is where you can get hammered in taxes. Like you can easily save 15 grand in taxes just by choosing the right entity and working with your accountant up front and planning ahead. Deduction number three, self-employed health insurance deduction. Look, health insurance costs a lot. I know a lot of you small business owners aren't even going to have health insurance, and or if you're like me, you're on a health share program type thing where it's more of a church ministry, and you're really just passing checks back and forth to each other, and so it's not really qualifies as insurance. It's something different. But if you have health insurance, if you've added that as a core benefit to your business and your an S corporation, you need to make sure you're tracking this correctly because the IRS can really come after you if you're not doing this correctly. And I've seen it done wrong a lot. But bottom line, if you're the owner of the business, you do get a deduction for your health insurance, and it should show up on your personal tax return as a deduction there, not be recorded through the business. And it should technically, if you're S corporation, should show up on your W-2 as a benefit. So it's more complicated on how to report it properly. That's the key, is making sure it's reported properly so you actually get the deduction. All right, this one, the qualified business income deduction. It's not available for a specified that SSTB is specified service trade or business. So if you're somehow watching this and you're not a construction business and you're an accounting firm or an attorney or something like that, then this deduction is going to be phased out for you at higher income levels. So if you're in construction, you're probably okay, and you're always going to get this 20% deduction. But again, it is important to make sure that it's actually there on it shows up on your personal tax return. And I've seen it missing on tax returns. I don't know how, because in our tax software, when we plug, the business income in, it automatically goes through the calculations, and there's literally a line on the bottom of page 1 of your personal tax return that says qualified business income deduction. It should show up there. If you see any business income on your return somewhere, you should probably have a number there. Now, if you had losses in prior years, maybe that kind of offsets some of the deduction that you get in the current year. There are legitimate reasons why it may not show up there. But bottom line, I've seen it missing, so make sure your CPA is doing this one. Deduction number 5, bonus depreciation or Section 179. Now, I'm recording this after the One Big Beautiful Bill just passed, so it looks like bonus depreciation has been made permanent, which kind of begs the question for a lot of us, like, why is Section 179? Why didn't they just get rid of that? Because bonus depreciation, there's some advantages to it. Maybe if you're a really big business, maybe Section 179 still does something for you, but I work mostly with smaller businesses. So, anyways, here's what I want to say though about it. It's not always worth it since it requires spending money to get the deduction. So don't just buy stuff for a tax deduction. All right, don't you get to the end of the year and you're doing some year-end, tax liability planning to see if you need to make an additional payment by the end of the year, or just so you kind of know what you're going to owe in April. Um, and your accountant tells you you're going to owe, 30 grand. And then in your head, you're like, oh, I can just go buy a new truck and wipe that out. No, that can be a really stupid decision, because now you're going to go spend money on a 50, 60, $70,000 truck or a $100,000 truck. So that's just a bunch of money you're shoveling out the door just to reduce your tax bill that's still going to be there, and you're still going to have to pay something in tax. So you're spending more money to like pay slightly less somewhere else. Doesn't always make sense to do that. Here's also another. Oh yeah, it may not make sense to take the full deduction. All right, sometimes it might make sense to just spread that deduction out over a few years, like you normally would, anyways, depending on what your income is and what you're expecting. So it may not even make sense to take the whole thing every single year. And the deduction is not as big for trade-ins. So there's this thing called depreciation recapture. So if you just bought a new truck 2 years ago and you're thinking, oh, I'll just buy another truck, and get rid of that tax. Well, no, the IRS is onto that little trick. There's depreciation recapture, 25%, tax rate on that. So your deduction is not going to be nearly as big, because you're going to trade that 2-year-old vehicle in, and the IRS is going to tax you a bunch on that to offset the new deduction. It might still make sense to do it, but I'm just saying don't expect the full deduction. Don't be like thinking I'm going to buy $100,000 truck and I'm going to have $100,000 write off on my business. Doesn't always work that way. Work with your tax guy on it. All right, but all that to say, we have saved people 15 grand in taxes by advising them to buy that piece of equipment sooner than later. So really the core, or I guess the correct conversation to be having with your tax professional, or just with yourself in your head, is, hey, I'm going to owe. I had a really good year. Is there any piece of equipment that I know I'm already planning on buying in the next 6 months, anyways, that might make sense to buy now before the end of the year to offset this higher income? Maybe you're not, maybe, you had a one-off project that, you just killed it on and made a huge profit on this year. You're not expecting that next year, so you're expecting lower income next year. So maybe it does make sense to pull that deduction into the current year. So sometimes it makes sense. I'm saying just don't do it by default. I hate telling people to go spend money or advising them to do that. I just hate seeing people spend money when they shouldn't be, and they'd be better off just keeping all that money and paying a slightly higher tax bill, because they'll still end up with more cash in their pocket at the end of the year. All right, so how to get more help. If you want to work with me for free for 30 days, you can. That'll give you a sense of what it's like working with a CFO or COO in your business. Just click the link in the description below, and you'll be able to schedule a quick 15-minute call with me, where we can chat and figure out kind of what you want to do, and I can show you what the 30 days, how that will kind of play out and what you're going to get out of it. It's been super helpful for a lot of people. So Click the link in the description below and get back to work.